Good morning, legends. It's not even morning, it's the afternoon here. How are you guys? It's been a long time since I've been able to live stream, but I just finished filming an entire video for you guys. Was in the process of uploading it, and then this big candle right here happened. So I figured, screw it, I'm just going to go live. In case you don't know, in order to put up a 20-minute video, it takes about 90 minutes editing time. And when you're trading smaller time frames, a lot can happen in 90 minutes. So I'm a bit annoyed because there was a lot of good information in that video, but we're here, and so we're going to discuss the current price action. As you guys are jumping in, if you can hear me okay and see everything okay, just leave me a yes in the comments of this video. Like I said, this is the first time I've been streaming in this studio, so I just need to make sure that everything is all good. Who we got here? Shane, what's up, my friend? Janet in the house, Georgie, Gabe, and Ned. Awesome. Thank you, guys. Thank you. All right. So let's get into this then. In a nutshell, in the video that I had recorded for you guys, I was expecting another move down. It's just happened. So I want to talk about this going back from how I arrived at that decision. So looking at the current price action, I'm on the 1 hour time frame, and usually when the new week starts, we talk about, if you've been watching this channel for a while, you will know that I always start my first video of the week talking about the weekend trap. But in addition to that, you also need to zoom out and look at your last peak formation, high or low, because that is where you start your counts from. So if you're brand new to this channel, you may not be fully aware of what these counts are and levels and things like that. This is basically the model that we trade here, and it starts with a weekend trap, which is basically price just trapping you into consolidation. It happens on Fridays, usually during UK, sometimes during US, and that is why we say it's best to close your trades out on Fridays during UK so that you don't become part of the trap. Then price will either go into an M or a W formation, which starts the rises and drops for the week. So in this particular example, we have a W formation that leads to 1, 2, 3 levels of rise. That usually is 3 rises over 3 days, give or take. And then that follows with an M formation. And then the M formation gives us 3 drops over 3 drops or 3 days back into the sideways consolidation by Friday UK. So this is the model that we trade every week. And so keeping that in mind, this is why we always need to zoom out and have a look at the peak formation. Now, the higher you go in time frames, the longer those drops and rises are going to take to play out. So that won't happen within a week's time frame, but the 15-minute does. So if you're wanting to learn more about this particular method, be sure to smash that like button if you haven't already, because it really does help me get these videos around the internet, especially whilst we go live. And as we are live at the beginning of the video is the best time to do it, because it does send that message to YouTube that you guys are liking what you're hearing, and then therefore more people will come across this content. Also, hit subscribe if you're not already subscribed, and smash, I already told you to smash the like button. What was the other thing? Turn that bell notification to all. All right, guys, so let's talk about this 1 hour time frame formation that we got going on. So this is the M formation here that formed week before last. This is definitely our drop level 1. That's easy to see because we broke the 50 EMA with volume. Went into a sideways consolidation there, and this right here is the level 2 drop. In my opinion, it was a level 2, and I warned the community about that in the Sunday night update here, where I said on the 1 hour, it looks to me like we've had 2 drops and there's 1 more to come. And so that was this drop right here. Now you might ask me, why don't I count this red candle or this red candle as a drop? The reason is because of the volume. So if I move across here, you can see where this was definitely level 1. This was a high volume spike right here in the volume. And then these red candles here, they weren't as much of a high volume spike until we got to this one right here. Then we can see that it was quite significant. So that's how I personally count my levels. I'm looking to see the volume in relation to previous levels volume, as well as just a spike on its own. So for that reason, to me, there was still one more to come. And then what actually happened over the weekend was we got into this weekend trap right here. Now I'm going to go down to the 15-minute to explain that because it's way easier to see. And if we have a look at this weekend trap box right here, this is where US closed on Friday, and this is where the market opens, which is Sunday, 5 p.m. New York. Now, what happens is the market maker traps you into the sideways consolidation. During this period of time, the goal is to trap retail traders into guessing which way price is going to go, because price just, you know, there's not a lot of price action, it's low volume, price just goes sideways. What happens when price goes sideways for a long period of time is people who lack patience, which is a very common thing in your trading journey, to lack the patience. People who lack that patience end up just guessing what they think price is going to do, and so they'll just open a position, especially when price is just in a sideways consolidation, because what will happen is your typical retail indicators, like for example Bollinger Bands, they tighten. EMAs even, they flatten out. So your EMAs flatten, your Bollinger Bands tighten. And what are you taught about Bollinger Bands when they're tightened? You're taught that a breakout is coming. So as a retail trader, you have this fear, you have this FOMO, you're like, oh my God, a breakout's coming. I don't know what way, I don't want to miss out. And you end up either just guessing a position or you take a position both ways. Essentially, the market maker knows that this is how retail traders learn to trade on their journey and in their amateur phase, which your amateur phase is when you are the market maker's biggest target, right? That's why they say, I think it's like 97% of traders fail, because they don't focus on this part. They don't focus on who is the person moving the money or moving the market, and like, how do I start to read what they're doing, as opposed to just drawing my triangle or just drawing my support and resistance. Nothing wrong with those things, but this is like a game of chess. Who's your opponent? If you can't learn to read them, you can't win, right? So essentially, this is what happens in a sideways consolidation, is the market makers know how to read you. They know how to read that if they just hold price sideways, you're going to get bored and you're going to guess. And then what happens is they make a move like this, which breaks the range. Now, in breaking that range, they break a support level. And what that does, two things. It stops out people who guessed to go long, or liquidates them, depending if they're on high leverage or not. And at the same time, some people place sell stops below where they believe support is, because they think if price breaks support, it's just gonna, like, you know, massive red candle drop to the downside, and they want to be part of it. So they put a little sell stop here. Price breaks that, triggers your sell stop, doesn't go to your take profit, obviously, and then just shoots back up into the range. Now you're trapped in a short. So the longs got taken on this move here, and shorts got trapped. Then obviously we see what happened here. So this move to the upside has done the opposite for that. It has triggered the long orders who had what? They had buy stops above resistance. Exactly the same story in the opposite direction. But these people who got trapped in their shorts are for sure, if they're on high leverage, they are now liquidated. That for sure, a move like that would take out 100x and 50x traders. In addition to that, if I zoom out on this level, you can see here that price returned to this area right here, which it's a 4-hour and a 1-hour trap trader zone. On the 1-hour and the 4-hour, you see a vector candle at the very top of this formation right here. And the exact same thing happens. It's a trap as well, where if I just zoom in so you can see these two areas, what happens is, if you can see a wick, there's long and shorts there, right? Someone had to go long, someone had to go short. Otherwise, the wick wouldn't exist. So at the very top of these wicks, people went long, right? At the very top of a move like this, people went long, which you might look at that now and go, why would you go long there? Because at the time, you didn't think it was going to end there, right? So people have gone long here. And then what happens is the market maker brings price back. So they've gone long, they've made a mistake. Price moves away, they're trapped. If they're not already liquidated from this move down, they are hanging on by a thread, and they're going into this emotional state of telling themselves, no, I'm right. I am right, price will come back, and then I'll be able to get out at break even, right? That's one story that retail traders tell themselves in their learning journey. The other story is, no, I'm right, it's going to come back and then it's going to continue to the upside. And what they do is they choose to hold through this drawdown right here. So if not liquidated in that drawdown, they're still hanging on and they're waiting for price to come back to their entry. Now the market maker knows this. They know the thoughts that we think as retail traders, because no matter what, every single one of us have been through the same journey. We all have those same thoughts. I've done this, right? I've taken a trade here, a long position, and ridden it all the way down to be in a drawdown of $40,000. And then it's come back here where it was only a $3,000 difference and gone, nah, I'll get out at break even. And then I ended up getting out at a 20 grand loss. So every single one of us who is a trader has done this, and the market makers know that we do this. So what happens here is price comes very, very close to your original entry, and you tell yourself, okay, I'm in an X loss right now, but if I hang on a bit longer, I'll get out at nothing. Or told you I was right. That's the other thing, right? Because as humans, we can't accept that it's possible we could be wrong, right? It's another emotional thing we have to get through. And if you want to be a good trader, you have to accept that it's not bad to be wrong, right? The point is, you just have to design a system for yourself that will allow you to be wrong and still be profitable. Right, so it's just a matter of how often you're wrong according to your risk to reward, your win rate, all that sort of stuff means you can be wrong a lot and still be profitable. But the point being is that these people here, as price was moving back, these trap traders are telling themselves they're either going to get out at break even or they were actually right and price is going to shoot through to the upside now. Market maker sends price close just to let you believe that. But doesn't release you. So what we know now is that traders here are still trapped. The long traders are still trapped, and price returned here. It would have encouraged more long traders here. So they've got trap traders here, then bang, they sharply reverse price. But according to the 1 hour time frame, this is just drop level 3, right? We were expecting it. This is drop level 3. However, before I came live, the orders that we had in the heat maps were at 29,500 and 29,350. And what I was saying in my recording about that was they weren't very high. They weren't high enough for me to believe that a bounce was going to come there. But as price was here as I was filming, but what I was saying was, see if when we get closer, if more orders come in at that level to hold it. Obviously, they didn't come in because price has now broken through both of those. So we're going to erase that and we'll have a look at the heat maps in a second. And we can see here that these are the liquidation levels that they smashed through. So we had one right here, which was around the low of the week. That is a great area to look for bounces. We've already broken it, so that is now irrelevant. But usually the low of the week is a good area to look for bounces. And we've broken a further 2. Now, the problem that I have with this right now is that if we go out to a higher time frame, like let's go out to the 4 hour. When we look at the 4 hour now, see here how the 4 hour, that's the vector I was telling you about that trapped the traders. This wick returned to it, but didn't release them. We've now broken this range here of where wicks were previously going into on the 4 hour time frame. We've now broken it. So this drop that we've just had, there is a chance that this now may feed up into higher time frames. Usually on a false move week beginning, we look for a change in trend at the session changeover. So it can be Asia into UK or it can be UK into US. And so now we need to do that on the lower time frame. But when you see where we are on the higher time frame, there is a chance that the changeover is not, the change in trend is not going to come this the start of this week. There is a chance that this move down here is the start of the actual 3-day trend to the downside. But here's how you're going to know the difference now. So UK has made the shift to the downside mid-session, and it looks that it's having a tiny bit of a retracement now. We'll try to match this up with heat map orders in a second. If the second side of a W, so this right here could potentially be the first side of a W. If a second side forms in US, then you would expect that this false move week beginning, which was here, and then this is the 1-day trend to the downside, you would expect that that is going to be over. However, if instead price now starts to make its way back to the 50 EMA or even the low of the day here, which is sitting at about 29,616-ish, that kind of area. So if price makes its way back here and looks weak, then you would probably expect that there's going to be more moves to the downside. At the same time, what would happen is this 50 EMA would start to do this. So you just get a rejection of the 50 EMA for more downside, and that would mean that the levels are feeding up. Now, let me just get rid of this. Let's have a look at the heat maps to see if they're giving us any hint at the moment. So what we cannot see inside of this current candle right now is we cannot see short orders that are looking for that retracement to push price down. Doesn't mean they won't come, but right now they're not there yet. The highest level we have is at 29,400. A 752, it's not really a lot. It's not going to cause a big movement in the market, but that's all we have for now. So that would mean at 29,400, where would that be? Let me just mark this, 29,400. Yeah, actually that would mean instead of getting a W, it would look potentially more like a H pattern just because of where those orders are, which a H pattern just comes back to revisit this area because it didn't pick up everything that was waiting there the first time. And then you essentially just reassess the price action after it's played out. But it's, oh, here we go. It's not that significant. Oh, that's gone. It's goodbye. What we have below price now, as far as targets, if we continue dropping to the downside, is 28,600 and 28,500. So let me just add those in. This takes a lot longer when I'm doing it live. 28,600, 28,500. Which would be down here, which would lead us to believe that we're probably going to continue down from here. So it would look like a H pattern that breaks, retests, and then heads down into these long orders, and we reassess from there. What would change my mind about that, as I said earlier, would be if US gives us a second side of a W. So if this level holds here, honestly, it's not looking great. But if this level holds here, and then, because there's still a while to go before that actually happens, mind you, like, how long have we got into, say, around the first hour of the US sessions? 3 hours to create a second side of a W. That's a lot of time. So not feeling all that hopeful of getting a reversal here. And look, to be honest with you, I would personally prefer that price does continue down and that this is the start of a 3-day trend to the downside, because if that were to happen, then we have midweek reversal, which usually lines up with a news event. And this week we have the FOMC. So that's a big news event. And the thing with this one, most news events are, you know, like say for this one, consumer confidence, usually the effect is one 15-minute candle. Like the news comes out, there's volatility for a 15-minute candle. You wait maybe half an hour to an hour after that, and then you can just trade what you see normally. But when it comes to FOMC, you've got the statement that comes out that causes an initial reaction, and then you have the actual press conference, which can cause a second reaction. So it's a lot harder to trade the FOMC, and you usually are better off waiting like till post that conference and before you open any new trades. But because this is on Wednesday and it's 10 p.m. Dubai time, which is going to be around the middle of the US session, and US can bring a lot of volatility, it's possible, like if we continue down for this whole start of this week, that we do get the midweek reversal around this. Obviously, it's way too early to say that, and you know, we'll go day by day and see how we're looking tomorrow and then on Wednesday leading into this. But usually the open interest gives us a hint before the FOMC as to whether or not we're going to get a midweek reversal, and we kind of don't really even need to know the result. We can match it up with volume, open interest, and price action. So we will definitely be doing that this week. But yeah, currently, if you're short, I would hold on to shorts. I don't think there is a reason to exit shorts right now, and I certainly also not yet do I believe that it is the time to be bag flipping to longs. Speaking of bag flipping to longs, guys, I don't know if you guys have seen this, but if you are trading on OKX, they have just released the bag flip button, which we've been asking for a long time in the TTC community. It is just they call it a reverse button, which is like not as cool as us, but anyway, whatever. They wouldn't call it bag flip button even though we begged, but they now have a reverse button. So this is such a game changer for the way that we trade this method. And let me just quickly show you why. If I go back to our model, where did I put that model now? Up here, so here we go. So if we go back to our model, this is the way that we personally trade at TCC. This is what we try to do. Our number one goal every week is to try to get our 3-day swing at the start of the week, right? And we get that off the second peak of the M or W, whichever one it is that starts the week. Then we wait for the second side of the M or W the other way midweek, and we bag flip that into a position the other way. So whilst, let's just say it would look like this. We catch this long position here and we ride that until we see the second peak of an M form. Why don't we exit until then? Simple, because we don't know the trend is over until we see that second peak form. Then on the second peak at the same time that we close this trade, we also open a position in the other direction and we hold on to that until the weekend trap, which is usually in Friday UK. So our goal every week is to get our bag flip trade. And the way we used to have to do it was as price created this second peak at midweek reversal, we had to manually close this trade and then manually open this trade. But now with the reverse button, we can press one button to close our long and open our short. And then in between that, we just day trade for extra profits if we feel like it. But our goal is always to get our 3-day swing either way and just ride that through the 3 levels in the 3 days. So that is an awesome feature. If you guys are looking for somewhere to trade, check out the link in the description of this video for OKX. It does give you 15% discount on your trading fees, and you can take advantage of that new feature, which is magnificent. Now, is there anything, let's have a look at high block, what's going on, because this just had a spike in delta, which is now sitting at 6.9 billion to the shorts. Before that, it was pretty neutral. It was basically nothing. The shorts and the longs were at around 300 each. So it was pretty 50-50, and the retail sentiment was 50-50 as well. But we can see now that it's completely shifted. The shorts are now at 463 and longs are at 200. So definitely people are feeling a lot more bearish now than they are bullish. Let's talk about some key levels that we've got going on if we do continue down. So we've got 28, say 28.9, 28.6, oh my Lord, my eyes can't see, and 28,000. So 28.9, let me just change these. Hang on a second. 28,900. By the way, if you're enjoying this stream while I'm doing this, smash that like button and let me know that you are gaining something from it. 28.9, 28.6 was another one. $28.6. So if we have a look just at those two levels, we'll see that that second liquidation level takes us into where those trading light long orders are. So it seems like a good target to me, you know, unless we get that W formation as we head into US session. I personally don't like single session W, so I'd be a bit wary of that if we did get a single session W. But if we get a multi-session W, being that the first side formed in UK, which it possibly has, and the second side forms in US, then I would say that's it as far as the move to the downside, and we're probably going to go up into FOMC. But if we don't get our W formation, just stay short for now, with your goal being initially around the 28, these two liquidation levels, but initially around the 28.6 to then reassess once we're there. Let me check some of these comments just to see if there's anything maybe that I've forgotten. What, a bag flip button on OKX. So good, isn't it? It's so good. Oh, actually, what I did want to say to you guys was keep an eye on Dixie, because this was a chart that I posted on Sunday in our Discord. And on the 1 hour time frame, we have a W formation. This is rise 1, retrace, rise 2, retrace. Are you guys seeing that whole thing? Yeah. Rise 3, and because we have a high economical news week, it is likely that Bitcoin and crypto will fall back in line with what traditional markets are doing. I know lately it's kind of been doing its own thing and it hasn't really given a crap what everything else does, but I do feel like this week it is likely to fall back in line. Now, the thing with this is, what I was saying in the Discord about this message was we had declining volume here before this current spike. Remember, this was Sunday. So we have declining volume here. We had rising price, but we also had a divergence on the RSI. Since then, the RSI has created yet another lower high, but price has created yet another higher high. This move right here could be an extension. That's what I would watch for, simply because it has not yet fully closed this vector right here. So it could be a reset, it could be an extension. The way you're going to know the difference is if price comes back now, which has got 3 candles that's come back, but if it comes all the way back and fully recovers this green vector, then you'll be looking for it to break the 50 EMA next. So it will fully recover this. Then you're going to wait for it to break the 50 EMA, retest that, and then you would expect that the Dixie's move to the upside is over, and then hopefully Bitcoin would have an inverse reaction to that. However, because we're right in that vector zone right now, the other thing to wait for is it could, at this point in time, it could just create yet another high low like it did here, here, and here, right? And then make its way up for the next one just a little bit above the 800 EMA. So it's it's in the zone where you really have to pay attention to it right now, because the rejection or the breakthrough of that is going to let you know what is likely to happen next. The reason why I'm open to this potentially moving to the upside, whereas usually I would just say it's had 3 rises and extension, it's over. Like, I would just be decisive about it. But the reason that I'm not decisive about it and I'm still waiting to see what happens is, number one, we have broken 50% of the vector, even though not the whole thing. We have broken 50% of it. And number two, this volume here, it has now, it's larger than the last high that was right here. So we've had a volume increase in the move to the upside, and obviously that happened to try and get us through the vector. But because of that, you have to just be open to it going either way and just trading what you see. But I think if this breaks down and breaks a 50 EMA, or it gets through that vector and continues to the upside, that's going to this week have an effect on other things. So speaking of other things, let's have a look at S&P, how that one's going, because we identified this head and shoulders. It broke down. This is the retest of that head and shoulders. However, we haven't created a lower low here. So this is just a flat. And again, this is why I would be prepared for both options here. See if it creates another lower low, then we'll be fine and you'll be expecting these targets next. But so that's at 45.47 and 45.30. But if this now comes up and creates a higher high according to that one, then this thing was just a retracement, and we would expect something like that. Again, this is a 1 hour time frame, could take a few days to do that. Ideally, I want to see it come down, but at this point in time, we have to be prepared for both, simply because it hasn't created a lower low here, which is a problem. All right, let me see what else is going on in here in these comments. There's an annoying line on the camera. It's yours. There's no lines. Let's trade FOMC live. What about recovering the green vector on the daily at 28.2? Yeah, totally possible. You're talking about Bitcoin. Let's have a look at the daily for Bitcoin. If the 4 hour continues into its three level drops, it is very likely that the daily will recover this vector fully. However, you have to look at where we are in the full cycle then, because on the daily, when we zoom out, let me just try and get this so you can see the whole thing. when we zoom out on the daily, there's our very clear W formation. This is our rise, retrace, rise for level 2, retrace. This is level 3. It's pretty much over. And I know no one wants to believe that because we all want to go to 36 to 40K and whatnot. But it just doesn't look at this point in time like there is much more steam left. Of course, I do like that we are pulling back before FOMC because it gives us a bigger chance of upside post FOMC. But that's not a guarantee. So we have to wait and see. If we continue down before FOMC and we only come back to recover one of these 2 green vectors, but we hold at any of them, then we have a chance because price will still be above the 200 EMA. But we don't have enough price structure to be able to say that that's a guarantee yet. I mean, is it possible that we get a whole reset now that the level 3 is done? Or even that we just get an extension because enough damage hasn't been done and we get that extension to the 36. Yeah, 100% that's possible. But we need more structure to know if that's a thing or not. And in the meantime, you're better off holding short rather than believing that there's still more upside to come. You're just better off holding short, at least, you know, as it does come down through these vectors. And most of us, we got a really good short anyway. So, you know, there's no need to exit it just yet. What else is going on? I think I have no entry. Should I wait for US market moves and see what direction price is aiming? Good question. Okay, so if you have no entry, then what you would be doing, let's have a look at the 15-minute time frame, is if price cannot, I wouldn't try to enter all too soon, but at the end of the day, if price fails, where is the right tool here? If price fails, if the 50 EMA comes and does something like this, and then price comes up here and fails it and looks totally weak, that would be your entry for a short to hopefully get down here. Now, it is risky because you would be doing that on a reset. That would be a 15-minute time frame reset because one, this is a vector candle right here, a magenta that crossed the 50 EMA. So that is drop 1, this is 2, this is 3. So you would be going short on a reset. So you'd have to be confident that it is a reset. But the good news about it, if that were to happen, would be that it would also be a retest of the low of the week, which is an amazing place to go short for continuation. Providing everything else matches up. So that's what I'd be looking for. The low of the week is at about 29,490. By the time price gets there, the 50 EMA will catch up. You'll have a number of confluences. The final thing you need to look for is weakness in the candles. So inverted hammers, railroad tracks, star formations. What else is there? You know, whatever, any candlestick formation that looks bearish, if price can get back to that level, would be the better place. But would I to open a short of 29.4 where the heat map orders are? It's not a good risk to reward. Why? Because let me show you. If you were to open a short here where the heat, hang on a second. If you were to open a short here where the heat map orders are, your stop loss has to go above the previous structure, which is the previous lower high, and then you're hopefully going to go all the way back down here. That is a 1.6 to 1 risk to reward. Other channels are happy with that. We're not. so that just wouldn't be a trade that I would take personally. But you do you, man. If it fits within your minimum risk to reward, then go ahead. Let me just see if anything's changed on here. Nothing has changed. So yeah, that's what we're looking at. All right, what else is going on, guys? Retail is perpetually bullish. That's why influencers are always bullish and never say anything bearish in fear of, I don't know about that. I think people believe what they believe about their technical analysis. And there are people that just really love Bitcoin and they just don't want it to ever go down. I'm that person. I love Bitcoin. I don't want it to ever go down, but I trade what I see. Trading Bitcoin and believing in Bitcoin is two different things. But Yeah, I'm always way more happier when Bitcoin goes up, you know, even though I can make the same profit when it goes down, I still just want it to go up. Why? Because my cold storage looks really good. You know what I mean? So I think that's normal. I think that's completely normal. All right, guys, I'm going to leave it there because I don't want this to go on too long. Thank you for joining me on my first live stream back and leaving all your feedback in the comments. Yeah, let's see what happens at US changeover. If you're wanting to come and join us to learn this method in full, just go to the description of this video. There is a trader's toolkit in there, and under that you'll find a link and it will explain where you can come join us. You know, we're sharing these heat map orders all the time. We're sharing, you know, our high block data all the time. So you don't need to buy all these separate subscriptions yourself, unless of course you want them. But yeah, we're sharing them as a community. So consider joining us if you're wanting to learn this method in full. Thanks for joining me today, and I will see you guys tomorrow.